All right. Welcome to this course. In this video, I'm talking about market structure, but I'll be talking about some advanced stuff. I made some videos about trading, a proper introduction to trading view, to the markets, to charts, what charts are, what candlesticks are, and all of that. But I won't go through that again in this video. Just go back and watch previous video about um charts and candlesticks. That's if you're a newbie. So in the video, we're talking about the important candlesticks that you need to know as you begin your trading journey, what they are and why you need to know them. Because you can't know every candlestick on the market, you can't know all their names and all of that. You just need to know certain few that will make a huge difference in your trading career. Now, there are three candles that are very, very important for you to know, and these are the Marabozu candle, the pinback candle, and the doji candle. And Marabozu candle is a candle that has a big body size and small tails. Okay, talk about these candles individually, and we'll get to it right now. So the story of the Marabozu candle, we can call it Maru for short, but it's a Marabozu candle that I'm talking about. Now, the body, like I said, is very, very big. From the open of the candle, this is a bullish candle. So a bullish candle opens at let's say 5 naira and closes at like maybe 10 naira, the price of that. For a trading session, that's the price that that asset particularly closed. Talked about this in more detail in previous videos about candlesticks. So price opens below and closes higher in a bullish candle, while in a bearish candle, price opens high and close below. So in this candle now, price opens here, closes here. This distance between the open and the close is called the body of the candle. And in a Marabozu candle, it has 70%, the body 70% of the entire length. The entire length is from the low, which is the lowest low of the week here. This point is the low, and the high is the highest level of the top wick. So 70% of the entire body is Marabozu candle. Okay. Shortly, I will explain how to calculate this because it's very, very important. You need to be able to calculate to know if a body is up to 70%. Although I have already made an indicator that can tell you if a candle is 70% already, but I'll teach you how to calculate it manually. Now, I've shown this already. We have the open at the bottom and we have the close at the top. While from the top to the bottom is the total length of the candle. Something for the bearish candle. But the story here is that there's a consistent buying pressure. People started buying from here and they just pushed price strongly to the top. Sellers could not push price lower. Buyers were in total control. That's the story of a Marabozu candle. There's a strong buying pressure. Same thing for a bearish Marabozu candle. Is a consistent selling pressure. Sellers push price strongly and buyers could only push price a bit. So sellers were in control here. Now, I want to pause this video and look at this chart and tell me um the Marabout candle that you can spot. Remember the criteria: big body, small wick. So this is a Marabout candle, big body, small wick at the bottom and the top. The Marabout candle, this is a Marabout candle. The Marabout candle, very, very easy to spot. The Marabout candle as well. So just pause the video when you're watching it and try to spot out and strengthen your muscle memory. Look at this and you see Marabozu candle, Marabozu candle, Marabozu candle, Marabozu candle, Marabozu candle. Same thing here, same thing here. I remember this is a bullish Marabozu candle, this is a bearish one. Bearish, bearish. But some candles here are not Marabozu candles, simply because their body is not up to 70%. For example, this candle here, I see the wick is big, the wick is also big, the body of 70% in total. Now, how do you calculate the body of a candle? Calculate the body of the body first, then you calculate the total length as well to know the percentage if it's 70% of the candle. So we'll go back to trading view and we'll try to calculate that. So now on trading view, you have a candle, a 5 minutes candle, and this is the live chart. I want to see this candle is a Marabozu candle. Now, how do we see that? It's simple. First, you get this tool. It's called the price range. You draw from the bottom of your chart to the top. Now, once you've drawn that, you want to see the total length. Total length here is 0.23. Okay. Now, the body length is 0.19. I want you to see this. Let me increase the text size. Now, the body is 0.19%. Then the entire candle, that's I'm including the wicks on both sides, is 0.23%. Now, you need to take it to your calculator to get now. Is a calculator. You get the smaller number 0.19 divided by 0.23. That's 0.82. So this is above. Just take the first two numbers. First two numbers here are what you should be looking out for. So this is above 70%. So if it is 60 something, then this is not a Marabozu candle. But if it's 70 and above, there's a Marabozu candle. So divide the smaller number by the bigger one. That's how you calculate. Now, I said I created a indicator that tells you if a candle is up to 70% or is a Marabozu candle. So this is that indicator. And see this candle is blue. I made it in a way that a bearish Marabozu candle would be blue, while a bullish one would be red. So you can see this is normal candle of my bearish candle is black. But once it's a Marabozu, it turns blue. It's a blue candle because it's a Marabozu candle. Why a up Marabozu candle is red? Because if I turn it off, it goes back to normal colors. So to get it, you just search Marabozu identifier by Chon. Then you click on it and it's added to your chart. Then you can edit the color yourself. This for bullish, this for bearish, this for bullish, this for bearish. So you can edit it to your own taste. But it's very, very important you do that. All right. So back to business. Let's get back to what we're on. So I've explained to you how to actually calculate the body size of a candle. Now we're going over to special Marabozu candle. This is a special Marabozu candle. You see, there's some candles that have a long tail at the bottom, but little tail at the top. It has a big body as well. This is also a Marabozu candle, but it's a special Marabozu candle. Now, these are the criteria to tell. It has a long tail below, and the close price is near the high. And the body is up to 50%, is equal to or greater than 50%. So once you get the indicator, this also explains that to you. It also shows you this type of candle, shows you special Maribozu candle as well. Let me see if I can show you. Okay, you can see this is special Maribozu candle. There's a wick at the bottom, it's little wick at the top. Then the body is equal to or greater than 50% of the entire candle. So the indicator will show you this type of Maribozu as well. So just add it to your chart. Now, the story behind this is that there is a strong buying pressure. That's why this wick is here and this big body is here. But sellers could not push price lower. And there is a small tail at the top. Same thing for the bearish one. There's a strong selling pressure. Um, and there's a small tail at the bottom. Buyers could not push price up. So this shows you strong selling pressure. This shows you strong buying pressure. Remember this very, very well. Now, this example on the left chart. This had to calculate it manually, but you don't need to do that because there's an indicator already. Same procedure applies. Get the body length, then get a total length, then divide the body by this. The smaller one by the bigger one. Okay? Just like this, and you get it. Is if it's above 50%, then it's a special Maribozu candle. Now you can pause this to check for special Maribozu candles. Now, remember, for a bullish special Maribozu candle, the tail needs to be at the bottom, not here. If you see, this one now looks like a special Maribozu candle because the big body, there's a small tail, and there's a tail at the big tail at the top. But this is a bullish candle because it's green. So this is not a special Maribozu candle. It can only be for a special Maribozu candle, for a bullish one, the tail needs to be at the bottom, the long tail at the bottom, then the small tail at the top. So like this one now qualifies, but this one is not because it says that. But if it is a bearish Maribozu candle, this looks like a dodgy candle, but the tail needs to be at the top for a bearish one. For a bullish one, the tail needs to be at the bottom. So like I said, this one is a special Maribozu candle because it is at the bottom, the body is here, and there's a small tail on top. But this is not because there is the big tail is on the top, while the small one below. It is not. So focus on a long tail. It must be at the bottom for a bullish one. If a bearish one, it can be at the top. My second candle is called the pin bar candle. Pin bar candle has less than 50% body size, meaning that there is strong selling pressure at the top, same at the bottom as well. It shows you indecision because buyers are pushing price up, sellers are pushing price down as well. So that's why there's a long wick, and the body is very, very small. So this shows that buyers and sellers are joined and the power is not clear. Unlike this that shows you there's a strong buying pressure that price only buyers are moving price upwards. This shows you that there is indecision. The buyers and sellers, they are equal. So nobody is actually in control whenever you see a pin bar candle. Now, for a pin bar and dodgy candle, we skip the color side. The color does not matter. If it's green or it's red, it does not matter because nobody is in control. So you can't say this is a bullish pin bar or a bearish pin bar. Okay, because nobody is in control of the market. Now, this is a pin bar candle. Pin bar, they have long tails and they have small bodies. That's how you know pin bar candles. Show you indecision in the market. All of these are pin bar candles. Now, the dodgy candle. Dodgy candle has small tail, small body. Everything is just small. It shows that there's very low buying and selling pressure, just like the pin bar story. Buyers and sellers are equal. The power is not clear because the candles are very, very small. Now, if you look at this, you see this small candle, small candle, small candle, small candle, small candle. So these are small candles. So to know if a candle is a dodgy candle, you have to compare with the previous candles. and see, oh, this candle is very small compared to the previous candles. You understand? Like I said, small candle, small candle, small candle. So look at this candle size and see, compared with the previous candle, see this is a small candle comparing to the previous one. That I know a doji candle because sometimes you can mistake a doji candle for a Marabozu candle, but it's not. You can have the same body size, body shape. You can see this candle is looking um having a lot of body and small, but this is not a Marabozu candle because it's a doji candle. It has a small size compared to the previous candles. Now, the normal candle is the last type of candles. It's not a doji candle. The pin bar is not a Marabozu candle. It's just a normal candle. Now, in the normal candles, a candle is not a doji candle. It's not a pin bar. It's not a Marabozu candle. So look at this. You see pin bar. This is a normal candle. Normal candle. A candle does not meet up to 70% of body. It's a normal candle. You understand? So you can see um Marabozu, Marabozu, Marabozu. Then we have Marabozu and all of that. Then we have pin bar candles. These are pin bar, pin bar, pin bar, pin bar, pin bar. All these are pin bar candles. Okay, you need to take note of this and just watch closely. The candles that are marked with the green are Marabozu candles. So you need to pause and look at this. These are Marabozu candles marked with green. Now, Doji, this is a Doji candle. It's marked with red. It's small compared to the previous candles. Now, all these are pin bar candles. See, pin bars are a lot in the market. They have long tail, small body. Now, this is a normal candle. You can see the tail is big, but has a big body. It does not fit into the category of Marabozu or a Doji or a pin bar. So it's a normal candle. Now, when we want to read our chart, we won't be checking all the candles if they are pin bar or not. Okay, we'll just read and summarize generally. Okay. Now, the next thing that we want to look at for in the market are what we call trends. Okay, we want to look out for trends. We want to understand what a key level is and what a key level is not. Okay. Now, I believe we all know what candlesticks are. We all know what major candlesticks are already. Now, moving on to trends, how to define a trend in the market, what are trends, and all of that. Remember, let me show you something before I go to trends. I want to show you a chart. All right, so this is a chart. You can see this is a chart in general. We've studied candlesticks individually. You can see it's a Marabozu candle, a pin bar candle is a pin bar candle. But we won't be looking at pin bar like that. We'll be looking at it collectively. Okay? So I'm moving on to key level now and trends. I'm a bit fast, but try to grasp what I'm saying. Right, so key level. Now, the market does not move in just one candle. The market moves with several candles. Now, for the market, as it's moving, the market moves up, down, up, down, up, down, up, down. Let me show you something on trading view. Let me not rush this. Market doesn't move market doesn't move in a straight line. It moves like this: up, down, up, down, up, down, up, down, up, down. Why? Because market is not just moving like that, because it takes buying pressure or selling pressure to move. So when price moves like this, just like stopping to go and buy for your car, you move higher, For your car, you move higher. For your car, you move higher. For your car, you move higher. So price pulls back to get more strength to continue moving. Market moves, it pulls back to get energy to move on, move on, move on. So in an uptrend, price pulls back to get buying orders. It pulls back to a place where people are buying. People buy more, then it goes higher. When people are buying, it goes higher. That's a market move. Same thing for a downtrend. Market is moving lower, pulls back to where people are selling, goes lower, pulls back, goes lower, pulls back, goes lower. It continues until buyers finally take over the market and price starts going higher. Okay, you can now say the trend has changed. Now let's go back to all right, so I've explained pullback in the market already. So the market is the first wave, this is a pause wave, pullback wave, and a third pause wave. So first wave, pullback, second wave is the other way. First wave, pullback wave, and third wave. First wave, pullback, third wave. Get used to it. First wave, pullback, breakout wave. Okay. Now I said that as price moving higher like this, price pulls back to get energy to move forward. Pulls back to get energy to move forward. Just like you're driving, go back, you get four, you move higher. Go back, get four, you move higher. Now, the fall of your market is where buyers are buying for an uptrend. So as market is moving higher like this, price pulls back to a key level. Key level is where there is strong buying pressure. So people buy from there and it goes higher. That's why you can actually make money from trading because you have an idea that okay, there's a chance that people will buy from this level. So let me buy here as well. So when you buy, others buy as well. Price goes higher and takes everybody along. That's a key level. So as a price moves higher, it creates a key level. So when price creates a first wave and pulls back and goes higher like this level now is a turning point because as people were buying from here, people started taking profits. Then buyers came in and pushed price higher. So there's a chance that buyers are still at this point willing to push price higher if the price comes back to it again. Okay. Now, just like I said, market starts from here. People buy. Price going higher, higher, and higher. Then people start selling. Price start coming down, running out of fuel. Then it gets to this point, you get to a gas station, then you buy fuel here. Then price goes higher. So the chance that if price comes back to this filling station, there will still be fuel for you to buy to continue going. You understand? So you move like this, you come back here to buy fuel, you go higher. The chance that there's still fuel here if you come back again and you can now buy fuel and go higher as well. Same thing with the market. As people are buying, people start selling, price comes here. Then price moves strongly to go higher. The chance that people are here to buy more when price comes back to it. Now, this is selling pressure. People are selling here, selling pressure down to this point. Then price goes higher. Means that market makers, big boys, big banks, and funds buy the market here to push it higher. This point now becomes a key level because this is the point where big guys enter the market because in a trend like this pullback is what retail traders can do. You and your $10, your $100 in millions of people, they can cause this kind of pullback in the market. But to push price higher like this, these are what big boys, banks, and funds can do. Okay. So this is where you want to be buying from. This is where the big banks are at. Now, like I said, the turning point in the market is where things change. From this up move, big guys push price here. Small guys take profit, take profit, take profit, take profit. Say I want to take profit at 1 to 3 risk reward ratio, and you take a profit here. Then at this point, big guys enter the market, then we continue to push price higher. This is a key point in the market price can come back to. Now, in the real chart, you can see that, let's start from this point. You can see a Marubozu candle show that is a strong, consistent selling pressure. This is why I say you should learn candlesticks individually so you can know and read the market clearly. You can see that once you see this candlestick, this is a Marubozu candle, it tells that there's a strong selling pressure in the market. So strong selling pressure in the market, price moves down strongly, down all the way to this point. Then it moves here, then you can start is a buying pressure. Marubozu candle, buy and buy. Then price goes lower again to another Marubozu candle, and there are some buying pressure, buy, buy, buy. So up to this point, price comes down strongly again. So this shows you strong selling pressure, and here people are taking profit, people are buying here. Price came. So GG is a turning point in the market, just like here, turning point, turning point in the market. So you can see push price lower, buyers came, push price higher, then sellers push price lower again. Remember, these are the big guys. They are the ones that move with the bigger trend. This is a downtrend. Big guys push price lower. The traders take profits, push price a bit higher. Then big guys push price lower again. Traders take profits, push price higher because they are buying. Well, if you close your set order, you're actually buying. Okay, so push price higher to this point, then big guys push price lower again. So you can see this is a key level in the market because this is a turning point in the market. This is where um the big guys took control of the market again. So there's a lot of selling pressure here. This is a down key level of this 15 minutes chart on NZD USD. So if you were to trade, you would just enter at this point, the stop loss above this level. And as a new trader, you can take a profit at this low here. This point is where big guys enter the market. Now you can see that trade. Price came back. You can see at this point, price was here. So price came back to this key level, this market, where some banks entered the market strongly. As the price tapped it and went down strongly as well. So you want to go with the flow, go with the bank because you can't trade against. You can see people tried to push price here, but the banks are stronger because they have more money, they have more liquidity, and they push price stronger. So don't try to fight the market or fight anybody. Just go with the flow. Don't fight it. So you enter here, you can see price take you with it. Now, these are examples. Where is the key level of this market? Just look at it and try to find out yourself where the key level is in this market. If you look at this, you see price came, buyers push price, who took profits here, banks push price lower, who took profit here, buyers push price lower. So today, here's a key level, here's a key level, here's a key level as well. You can see here's a key level, here's a key level. Now, what you should know is that once there's a new key level, the previous key level does not matter again. So focus on the most recent key level of the market. Don't care about this anymore. Care about this one because this is the most recent one. And see, at this point, price broke the down key level. Okay. Now, whenever price breaks the most recent, not the most recent key level, means that the trend has changed. Mean that this is the point where big banks take their own profits because small traders are taking profits. You can see what they are doing. They're just pushing price stronger, but banks are pushing price lower and lower. But at this point, banks are now, because at this point now, people are now selling more, selling more, selling more, selling more. So banks are ready to now take profit because as they're taking their profits, people are trying to sell. So they are feeling their sell orders with people say they're filling their buy orders with people sell orders. That's the manipulation in the market. But if you are following the trend, you won't be hot because this level now, the price fell to, there's probably a huge liquidity zone where price people are buying, the bankers are buying from. Okay, but don't get yourself confused what I'm saying. Just focus on what this page is for to find the key level. So this is the key level, this is the key level. Focus on the most recent key level in the market. And once price breaks it, this means that the trend has changed. Okay. Now, once you see that there's a breakout of the key level, you need to map out the new key level in this wave. You can see this an up move, this is a pullback, this is a key level, this is another key level. So now this is a positioning key level where you should actually buy from, because this is where the bankers' money are at. The big bank, sorry. So you can see up key level where you should be buying from. See price came into it and price moved strongly. Okay. Now if you took this, you're making 1 to 3 reward ratio as a newbie. But if you want to swing this higher, I advise you can do that as well. So this is what market looks like. Goes higher, comes back to get buying pressure, comes back, comes back, comes back. So our goal as trader is to be able to join this comeback. Join here, join here, join as I make money as a trader. So you need to know where price can come back to and buy from there. Or if it's a downtrend, where price can pull back to and sell from there. As simple as that, as I make money. So this is a key level, here is a key level. So these are potential levels where price can come back to where you can actually buy from for price to go higher. Okay. Now, I would explain all of this in this course. I will explain key level, which I'm already explaining now, turning points in the market. I will also explain smart money concepts, and I'll just leave this one, bake and retest. I'll only leave these two, smart money and key level. So as price came into this level and went higher, this night there's a new key level here as well. Price can come back to. Now, I've talked about first wave, pullback wave, and third wave. But you can't just mark any wave like that as pullback wave because you think or it looks like a pullback wave. There are standards that is set to be able to tell or determine if a wave is actually a pullback wave or not. And I'll talk to you about that standard shortly. You can't look at the market and say, okay, this is a pullback wave because John said so. No, you have to critically analyze to check if there's the actual pullback or not. You can see you need to be able to tell if big banks actually push price higher, if people push price lower, and if big banks push price higher. Because if this is not the case, that means this level will not hold. If this is not if there's an actual turning point, if big guys didn't push price, people didn't take profit and push price lower, and big guys didn't push price higher again, then this will not be a key level, this will not be a turning point in the market. Furthermore, this price cannot buy from this level. So you need to tell that if this story is what you are seeing on your charts, okay, just like we're able to tell that bigger we are pushing price lower here, people took profits, push price higher, and big banks push price lower as well. So this is a valid turning point, meaning this is a valid key level. But if you cannot tell that, then this won't be a key level and price will not obey it. Okay, so let's get to that. Our pullback and our pullback standard. Now, what you know is that a pulse wave, which is the first wave, is longer. This wave is long. The pullback is shorter, and a stable trend will have a lot of pullbacks. Price will always pull back, pull back, pull back if a trend is stable. But price is going to take more energy to move higher. Now, this pullback level are the key level because they are the turning points in the market. Now, this is what I was explaining earlier about big guys in the market and how they affect the market. Now, this is a demand pool in the market. Big guys buy at this level. That's this very strong wave because it's long. It's big guys that can do this kind of thing. Okay, they buy. Now, retail traders, which are people who have small capital, $10,000, $1,000, $100, small capital. They can't really shake the market with their capital. They are taking their profits. And if you're taking a profit, if you ever take profit on NDFI before, if it's in a buy position, the take profit will be a sell order for that position. Once you take profit, you see sell. Just like you buying Bitcoin. Then Bitcoin moves from $100,000 to $110,000. When you take profits, you are selling your Bitcoin. Sell Bitcoin to your vendor and I beg, I need US dollar or I need Naira. So you are taking profit, but you are selling what you're having to liquidate or to get cash or liquidity for your assets. So when people buy at this, when everybody buy, when big boys buy, retail traders buy, everybody buys, price goes higher. Retail traders are not saying that's enough profit, let me take my profit. So they sell and you see price drops. As price drops, the big boys they join to cover that drop. They push price higher again with strong wave. There's another long wave like this again. This is when people took profit. This is when big boys push price stronger. They'll keep doing this until the big boys want to not take their own profit. Okay? Now, when people take their own profit, that's when you see trend has changed. You understand? So now what's the standard to tell if um this is actually retail traders taking profit? Because this is a pullback. And there must be two Marabozu candles or one big Marabozu candle and one small candle. Now, these are the standards to show that actually retail traders took profit. Now, it's a big Marabozu candle, a big Marabozu candle shows you that there are strong buying pressure, consistent buying pressure. Remember the story of a Marabozu candle. Or there's one big one and one small one. Now, two big one. The first one's close, right? Second one's close is above the first one's close. And the total length of the candle from bottom to top are similar. Okay, as for two Marabozu candles, you can take screenshots of this if you want. Now, same with two Marabozu candles, the close of the second candle is below the close of the first candle, and the two candles are similar. Now, the third one is these are two Marabozu candles. I've said this before already, Seth. Their body are similar and they are Marabozu candles. Okay, this is calculating their body, but you don't need to calculate them. Just look at it and see, okay, these similar candles, total length. Now, if you want to see two Marabozu candles on this chart, pause, look at it, and think of where possibly are two Marabozu candles. Now, you can see this Marabozu, Marabozu, Marabozu. So this is a downtrend. Big boys push price lower. Literally has to take their profits to Marabozu. You can see Marabozu candles taking profit, then price goes lower again because big boys are pushing price lower. Then they take profit again. Retail take profit again. Then big boys push price lower again. So this is a valid pullback. This is saying that okay, these people actually took profits. Okay. You can see two candles. This one closer, this one's high, closer above this one's high. And they're both Marabozu candles and they both look similar. Focus on these two, you can see both look similar. Now, you can see this one big Marabozu and one small Marabozu candle. They are the same color, but if they are different color, it can also apply as well. one big Marubozu candle and one small bearish candle. Can also show you that there's a pullback. So the standard of this is that the first candle must be big. You have to compare this candle with 5 recent Marubozu candles. And the second low of the candle of the second candle now is above 50% of this candle. Now, this low should not go below 50% of this candle. Now, your candle needs to be big. So if you look at this is a Marubozu candle. Okay. I can compare with the 5 recent Marubozu candles. I can say that this candle compared to this recent 5 Marubozu candles, they are small. So this is a valid big candle. This candle is a small candle. Okay. This is a small candle. So this is a valid pullback. Small candle. This low will not enter 50% of this candle. It's showing you a strong, consistent pressure. So I'm talking about the wick of this candle now should not come inside the middle price of this candle. I check that thing with the Fibonacci. Check Fibonacci from this point to this point. Let me do that now. You can see these two candles. This candle now, this low should not come to 50% of this Fibonacci. That's point. This candle must be small. The candle must be big. You can see how big this candle is. If you turn this this is a Marubozu candle. It's red Marubozu candle. You can see how big it is. Compared to this previous candle, it's very, very big. And this small candle as well. So it's valid. I wanted to show you so you know how to properly look at it. Now, yeah, that's that. You can see this candle. This is not 50% of this candle, so it is a valid case. The candle must be big compared with the 5 recent candles. So compare 1, 2, 3, 4, 5. This candle is big compared to the biggest one. It's big. Now, this is for a case where they are different color. This and this. The big one and the small one are different colors. Okay. Now the condition is a bit different. The first candle must be big just like the previous one. Second candle must be small, but second candle must be within 30% of this candle. Candle must not be more than 30% of this candle. That's very, very specific. Must be equal to or less than 30% of this big candle. Now, this candle is 50, we want 50 pips. This candle needs to be 50 pips or lesser than this candle. And look, its lowest low must not come below the mini price of this candle. So it's similar to the previous rules, but this candle must be 30% or lesser than this big candle. Big candle must be a big candle compared to the 5 recent candles, Marubozu candles. See if it's big enough. Remember, I can screenshot these rules and remember them. So for this is a bearish case. Now I talked about bullish case before, but the same thing applies. Big candle and one small candle. This when they're the same color. This low will not come into the middle price of this candle. If they are the same color, if they are different color, same rules apply, but this one must be less than 30% of this big candle. Now, price action confirmation in pullback. Now, when we have these rules, we have our rules for two Marubozu candle, one big candle and one small Marubozu and one small candle, one big Marubozu candle and one small candle is different color. We have our rules. Now, what will happen if one of these rules fail in the market? That's price action confirmation. So these are all the rules for two Marubozu candles. The second candle must close above the first candle, and we must have similar lengths. For there must be one big Marabozu candle and one small one, and small one 30% of this previous big one. For this, price must not come below the middle price of the previous one. Same with this as well. Now, what happens if one of these rules fails? Remember, I screenshot this to check over and over again so you know it. Now, you need to wait for one candle to close above the highest high of the original pullback. For example, this candle now, man, 30% of this previous candle. You have to wait for another candle to close above the high of these two candles. Let me show you what I'm talking about. So, for example, now, this, let me show you something. For example, now this candle now and this candle, they are not one of the candles failed here. Let's forget about this candle. Let's say these two candles now. This candle, the wick comes below 50% of this candle, just like in this one now. This is a Marabozu candle, this is a small candle. So I have to follow the one big candle and one small candle pattern, pullback pattern. But here now, let's say this wick comes in as more than 50% of this candle. What do we do next? Now, you need to count the next 4 candles and wait for a candle that closes above the original high of the pullback pattern. This is the original high of the pullback pattern. So you count from 1, 2, 3, and 4. This candle now close above this high of this pattern. So this now becomes a valid pullback. That's what we call price action confirmation. Because the original high of the pattern, this is the original high. This candle, let's just assume this candle did not fail in this screenshot too. But I'm just assuming it failed, that this second one failed. This wait for count the next 4. 1, 2, 3, 4. If in the next 4 no one closes above, then it is invalid. Okay, but you can see 1, 2, 3, 4. One candle close above original high, so this is a valid pullback of the pattern. Tells that there is a strong, consistent buying pressure in this pullback. Now move over to breakout standard. A breakout standard is similar to pullback standard, very, very similar. We have 2 Marabozu candles, 1 big candle and 1 small candle, and price action confirmation as well. Now, breakout is applied for all the zones, for key level zones, recent high, recent low. Before you can say price, create a pulse wave, create a pullback wave, and create a breakout wave or the third wave, price need to actually break out of the previous high. Price need to break out. So you can't just assume. You need to watch and check properly if price actually broke out of the recent high or price broke out of a key level. You need to check clearly. Now, breakout can be used for range. If it's the range, price break out of the range, break out of high, break out of low, break out of key level. Now, let's talk about breakout line. Okay, this breakout can represent key level, POI, recent high, or a range. This is a breakout line. Now, price needs to have 2 Marabozu candles. This is one of the standard. They need to be one bullish Marabozu candle and another bullish Marabozu candle that closes above the breakout line. And for 2 Marabozu standard, the 2 candles need to close above the line. It's a key level line or whatever line it is. One close above, the second one close above it. And they must be similar in size. Okay. We don't check how many percent of the candle closes above the line for 2 Marabozu candles. Okay, because they're 2 Marabozu candles. But if they're not 2 Marabozu candles, we need to check. So you can see this a bullish Marabozu candle, that Marabozu candle closes above this high. This is a valid breakout. This is a range. We'll talk about range in the next video. This is a recent high. This is a pulse wave, pullback wave, breakout wave. So the two marbles can close above the recent high. So this is a valid breakout. Now, breakout standard. I talked about two Marubozu candles. Now, we'll talk about one big one and one small Marubozu candle. Now, you need to have the first big candle and the second Marubozu candle. Second small candle. The first one need to be a Marubozu candle. And it needs to be big. Compared with the 5 recent candles, and the lowest low of the second candle is above 50% of the Marubozu candle. And more than 30% of this Marubozu candle closes above the breaker line. You calculate from here to this point. But just use Fibonacci on this. Let me show you on TradingView. So, for example, this is a breakout line here, for instance. So you simply just draw a Fibonacci from only the body. Don't draw the wick. Lowest low of the body. Don't include the wick. 30%, 0.3 need to be above the breakout line for it to be a valid break. If this 30%, if breakout line is here, then this candle is not a valid breakout. Okay, so 30% need to be above the breakout line of the body, not the total candle of the body only. So back to the body needs to close above the breakout line, and then the second candle needs to be there. Must not go below 50% of the big candle. Those are a valid break. There's 10%, and this candle is here. It's not a valid break. But not a valid break because it's red. Okay. It will show you strong breakout. So you can see this recent high. You can see this is a strong Marubozu candle closing above it, and this is a small pin back candle. It's a small candle that closes here. It didn't go below 50% of the candle. It's small. If you compare this candle with the last 5 candles, 5 Marubozu candles, see one. Okay, this is a Marubozu candle. 1, 2, 3, 4, 5. Check out the biggest candle. This is the biggest candle here. If you check this and this one is bigger than this one. They have similar sizes. So this is a valid big candle and this is a valid small candle. This do not go below 30% of this candle. So if you want to check if you count 30% of the previous candle, I think I've explained that already. You can draw the full candle, full Marubozu candle, and take the Fibonacci with the size of the candle, take it to the small candle, see if it's as big as 30% of the candle. You can see this is not as big as it, so this is a valid this is a small candle that I can use. Okay, so back to valid breakout. Valid, you can see the bullish strong Marubozu candle. This candle closes here, small candle, you not go below 50% of the candle. And this is the same color, so you don't need to check if it's 30% or not. Now the body can see, just by looking at it, you can see that 30% closes above the breakout line by the conditions. Same thing here. This is a failed breakout because there's not 30% that closes above it. Now, this is for big Marubozu and one small candle that has a different color. So first candle must be big, second candle must be small, second candle must be big. Okay, compare it with 5 recent Marubozu candles. Second candle must be small compared to the previous candles. Compare this candle with this previous candle. total M of 30% of the previous candle. This one will become 30% of this previous candle. And price will not come below 50% of this level. Okay, you can see this. So you can compare the body size using that pattern I taught you to calculate. Or you can use Fibonacci to calculate it as well. So this is another example. This is a strong Marubozu candle. This small candle. Now, this is the third one. If one of the candles fails, what do you do? These two Marubozu candle break as standard. One big Marubozu and another big Marubozu must be there. This one candle must be big, one candle must be small. If it's different color, this candle must be less than 30% of the total size of this candle. And this candle's low must not come below 50% of this candle. If it's the same color, this candle should not come below 50% of this candle. This candle must be big. So what happens if one of these things fails? That's when you apply Patterson confirmation. Now you can't within the next 5 candles. Okay, it's not here. But you can within the next 4 candles wait for price to close above the recent high of the candle that failed. Like I explained in the previous pullback example. Let me go back to it again. Let me refresh your memory. If now price failed here, you need to count 1, 2. These are 2 candles. For example, this 2 candle fail. And let's say this is a breakout level. You need to count 1, 2, 3, 4. 4 candles to see if price closes above the high original pattern. You can see that, then you can say, okay, price has confirmed this. Okay, the original high at this level. Count to the next 4 candles. 1, 2, 3, 4. I need to close above this high to confirm that price has actually broken out of your breakout line. Okay, that's what I explained about price and confirmation. You use this for pullback, also use it for breakout as well. Now, there's a special case of breakout I haven't talked about. Now, if there is 2 normal candles and 1 Marubozu candle, is a valid pullback or breakout. So, for example, this is a normal candle, the 1 Marubozu candle is a valid pullback or breakout. Same thing here. You have to just cram these patterns. It's a pin bar, Marubozu, another Marubozu is valid. Because it's showing consistent selling pressure, it's also showing consistent buying pressure. Marubozu or a normal candle, pin bar, Marubozu. So this also showing you strong buying pressure. So third candle, there should be at least 1 Marubozu candle. Most likely the third candle is a Marubozu candle, or 2 Marubozu candle, 2 Marubozu candle. But there's only 2. There's 1 normal candle, 1 pin bar, 1 Marubozu is also valid as well. So this shows you consistent buying pressure. So if you can just keep this in your memory, and you see it's valid as well. So now you can see this is another one. This kind of came here, this candle confirms it. Okay. Now, fake breakouts. When price could not break out of a high, and see price came here, is a weak, is not a breakout. weak, weak, weak. So price did not break out of this high. So don't go and mark it as a killer, because if price didn't break out of this high, it means that the big banks did not join this move. This is not a turning point. This is not a key level to buy from. That's what this tells you. So price must break out off your high before you can use as before you can draw here as a key level. Okay, that was valid breakouts. Recent high. Price must break out of your high. So this is not a real breakout. Before, I'm sure you mark it as a breakout wave and mark it as key level. This will not hold. So I'll explain how to trade something like this in the next video, because this I created a range in the market. I'll explain how to trade a range, how to wait for price to break out of a range and all of that. You can use a breakout pattern for breaking out of range too. So if you see a range like this, we do that for a breakout pattern, and you can use that. So I'll explain range in the next video, and I believe we'll understand everything clearly. Thank you very much. Jesus.